Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what all these fancy financial reports actually mean. For companies, it turns out today we are looking at investment funds and they are showing us some interesting numbers about how they are doing and what they hold. So buckle up as we take a peek under the hood of BNY Mellon's Global Stock Fund and International Stock Fund. So first up, let's talk about the BNY Mellon Global Stock Fund. This report covers the period from December 1, 2024 to May 31, 2025. It is a semi-annual shareholder report and it gives us a snapshot of the fund's performance and holdings. Now let's dive into the financial tables because that's where the real story is. For the BNY Mellon Global Stock Fund, we are looking at a fund size of $787 million as of May 31, 2025. That's a pretty significant amount of money being managed. When we look at where this money is invested, the top holdings are quite concentrated. For example, Adobe Inc. and Microsoft Corp. are among the top 10. This means a big chunk of the fund's performance is tied to how well these specific companies do. Geographically, the fund is heavily weighted towards the United States, with 65.1% of its net assets invested there. Other significant country allocations include Netherlands at 3.7% and Japan also at 3.7%. This focus on the US market means that if the US economy or stock market faces challenges, it could have a disproportionate impact on this fund. Now let's talk about costs. For Class A shares, the cost of a hypothetical $10,000 investment was $60 for the 6-month period, which is 1.22% annualized. This means for every $10,000 you invest, you're paying about $22 a year in expenses for this share class. It's not pocket change, and this is important to remember because these fees eat into your returns over time. For Class C shares, the costs are a bit higher. A $10,000 investment would cost you $103 for 6 months or 2.08% annualized. That's almost double the cost of Class A shares. These higher fees are often associated with distribution and shareholder servicing costs. Then we have Class I shares where $10,000 investment cost around $46 or 0.92% annualized. This is significantly lower than Class A and Class C. These shares are typically for larger investors or institutions and don't carry those extra distribution fees. And finally, Class Y shares with a cost of just $45 for a $10,000 investment or 0.90% annualized. Again, very competitive pricing pointing towards institutional investors. The difference in cost between share classes is a key thing for investors to understand as it directly impacts how much of your actual investment gains you get to keep. Scrolling down to the actual portfolio holdings, we see common stocks making up 98.3% of the fund. For example, in Australia, they hold CSL Limited, valued at over $12 million. In Canada, Alimentation Couche-Tard Inc. is valued at nearly $15 million. The big chunk is in the United States. They hold Adobe Inc., valued at over $23 million, and Microsoft Corp at over $33 million. These are substantial holdings, meaning the performance of these two tech giants heavily influences the fund's overall performance. Looking at the fund's assets and liabilities as of May 31, 2025, the total investments in securities are valued at over $773 million. On the liability side, things like management fees due to BNY Mellon Investment Advisor are around $591,000. These are the day-to-day costs of running the fund. The statement of operations tells us about the fund's income and expenses for the 6 months ending May 31, 2025. Total income, primarily from cash dividends, was over $5.9 million. Expenses, including management fees, shareholder servicing costs, and other professional fees, totaled nearly $4 million. This left the fund with a net investment income of over $2.2 million for the period. However, the big story in the operation statement is the change in investment values. While there was a net realized gain of over $130 million, the net change in unrealized appreciation and depreciation on investments was a loss of over $150 million. This results in a net decrease in net assets from operations of over $50 million for the period. So despite making money on selling some investments, the overall value of the fund's holdings decreased during this reporting period. Now switching gears to the BNY Mellon International Stock Fund. This report covers the same period, December 1, 2024 to May 31, 2025. The fund size here is much larger at over $53 billion of net assets. That's a massive fund. For this international fund, the total expenses for Class A shares for a $10,000 investment were $62 or 1.23% annualized, very similar to the Global Stock Fund's Class A shares. Class C shares for the International Fund cost $100 for a $10,000 investment, or 1.99% annualized. Again, a bit higher, reflecting the distribution costs. Class I shares for the International Fund were $47 for $10,000, or 0.93% annualized, very much in line with the global stock funds Class I shares. And Class Y shares were $44, or 8.8% annualized. These costs are pretty standard for passively managed index funds, and it's good to see the lower fees for institutional share classes. Looking at the international stock funds portfolio, it's diversified across many countries. Australia makes up 3.2% of holdings, with significant investments in Cochlear Limited and CSL Limited. Canada is at 4.8% with holdings like Alimentation Couche-Tard Inc. and Canadian National Railway Company UN. France is a major focus at 13.6%, including L'Oréal SA and LVMH Moet Hennessy Louis Vuitton C. Germany is also significant at 9.0%, with companies like SAPC and Adidas AG. Japan is the largest country allocation at 15.1%, holding companies such as Kians Corp and Shin-Etsu Chemical Company Limited. The Netherlands is also a key market at 10.4%, with ASML holding NV and Universal Music Group NV. The United Kingdom represents 8.7%, with holdings in Encompass Group PLC and the Sage Group PLC. Overall, it seems like a well-diversified global equity portfolio. For the international fund, total investments are valued at over $53 billion. Liabilities include amounts due to affiliates and a notable liability for securities on loan, which is over $43 million. In terms of operations for the 6 months ending May 31, 2025, the International Fund generated over $70 million in cash dividends from unaffiliated issuers, and also a significant amount from investments in affiliated issuers, over $1.6 million. Total income was over $72 million. The International Fund also saw a net realized gain of over $251 million, but a net change in unrealized appreciation and depreciation of over $184 million. This resulted in an increase in net assets of over $114 million from operations. So, unlike the Global Stock Fund, the International Fund saw its net assets grow during this period. When we look at the changes in net assets for the International Stock Fund, distributions to shareholders were quite substantial. Over 23rd, it was more than offset by net proceeds from shares sold, which were over $434 million. This shows that despite the fund's distributions, investors were still putting more money in than they were taking out. The financial highlights section really breaks down the per share performance. For the International Stock Fund's Class A shares, the net asset value at the beginning of the period was $24,303, and it ended at $23,700. The total return for this period was 218%. That doesn't sound like much, but remember that's after all the expenses. For Class C shares of the International Fund, the net asset value started at $23.24 and ended at $22.294, with a total return of 1.82%. Again, a positive return, though modest. Class A shares saw their net asset value go from $24.22 to $23.86 for a total return of 2.35%. And Class Y shares from $23.92 to $23.55 with a total return of 2.29%. These returns are respectable, especially considering the fees are much lower for these classes. It's worth noting the expense ratios. For the International Fund, Class A shares have a total expense ratio of 199%, and Class I and Y are both under 1%. These ratios are critical for investors as they directly impact the final return. Let's briefly touch on the BNY Mellon Global Stock Fund's actual holdings again for a moment before we wrap up. The statement of investment shows a clear concentration in the US market, with companies like Adobe, Amazon, and Microsoft forming a significant part of the portfolio. This is a common strategy for growth funds, but it also means higher risk if these specific sectors face headwinds. Looking at operational costs for the BNY Mellon Global Stock Fund, the total paid to directors and the chief compliance officer was about $60,000. While this might sound high for some, it's fairly standard for managing large funds and ensures compliance and oversight. On the international fund side, the directors and chief compliance officer received a much larger $298,000. Likely due to the much larger size and complexity of managing that fund. Now for my take. For the BNY Mellon Global Stock Fund, the strategy of heavy US concentration, while potentially rewarding in strong US markets, does present a concentration risk. Seeing a net loss from operations in this period, though the fund is still substantial, is a red flag. The international fund, on the other hand, appears to be navigating global markets more successfully with positive returns and a good diversification. The significant difference in cost structure between share classes is a clear reminder for investors to choose wisely based on their investment amount and how long they plan to hold. The fact that assets are flowing into the international fund, especially in the lower cost share classes, suggests investors recognize the value there. For the global fund, the total distributions were over $96 million, and for the international fund, it was over $223 million. This highlights that these funds are actively distributing capital gains and income back to shareholders, which is a standard practice. Overall, while both funds seem to be well managed in terms of operations, the performance and risk profiles differ. The international fund looks to be on a more solid footing for this period, delivering positive returns and attracting new capital. The global fund, with its heavy US focus, experienced a tougher period with its value declining. This shows the importance of diversification and understanding the specific investments within any fund. Alright, that's our breakdown of these BNY Mellon fund reports. What's your take on these numbers and what they signal for these funds and the broader market? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives like this. You can also join our Discord community linked in the description below for more discussions and to connect with other finance enthusiasts. Thanks for watching. See you next time.